Good morning. It's about 10:30 UTC. Just going to give a quick market update since we've had amazing run the last couple of days, and we're starting to see a little bit of weakness, but it still looks pretty strong. So first thing that kind of stuck out to me is earlier this morning we've been in trading at almost, oh my gosh, over 60% short from retail traders, which is awesome. As long as they're shorting, the better. The market's still over 50% short, but we're seeing a massive amount of green smashing here at the highs. So generally, that means that we're potentially looking at a little bit of a pullback as long as the local stuff starts to increase in longs. That doesn't mean we have to take shorts until we actually break down, unless you're ready to hedge off some of the highs. But just something as a little bit of a warning signal. The next thing really sticking out to me is the funding rates. The funding rates are wildly, massively bearish. So especially on OKX, on the USD and USDT margins, BitGet, I mean, huge amounts of money in the sense that market makers and liquidity providers can be paid to take trades. Effectively positive funding rates. This is the real first kind of like thing you stare at. Oh gosh, everything is being incentivized to take short positions, and this is a major outlier in the sense that these large, you know, just for Bitcoin as an example, funding rate that high, you don't very often see it. And that's the Bitcoin open interest weighted funding rate. Market makers and liquidity providers who are providing billions of liquidity are going to be make a fortune if they can open their limit shorts to provide this. And this is because the short order book has been completely taken out. So just word of warning there in general. And if we do start breaking down, definitely look at some of these lower cap coins and some of the different exchanges potentially. Finally, looking at some liquidations, real-time liquidations, we're seeing not a whole lot across the board. It's still pretty mild. I would say the biggest thing here on the liquidation heat map, let's look at the week. There we go. So even on the week, there's still plenty of stuff to come back down to. If we start clearing this gap and losing the structure here, I'd love to see retests bounded down to like 86 and 85, just to grab that kind of like late liquidity before we get into a gap, and that would kind of, clear a lot of the local move. Realistically, there's a huge CME gap much further below us, and I wouldn't expect us to take that until we can accurately say that we've broken the upside structure in the current move. Finally, looking over at the actual TA for this area. So in general, I'm looking at it as like there's a local level here, which I'm interested in to regain. We're kind of like holding the lows here tentatively at like 87.2. It looks pretty weak. We've done the underside retest right now. And if we do start having that continuation move of just failure here, you want to see some pretty strong moves back down, to 85, to 85 and 86 at the very least. And I think there's some bigger liquidity if we get back down towards 83K. The number one thing is to remember here that the priority is technically still up. If we do start losing these lows, that does break the priority back to the downside. And there's a lot of stuff to retest lower. We have a massive, absolutely gigantic CME gap down here at 76K. Now, if we're going to fill it, that's the question. We're still in a priority upside trend. We have a lot of stuff back down here to retest. We've got some huge, fair value gaps or market inefficiencies where price is full cent, where there's no retests. So they're overdue to get some of these retests taken out, and that's natural for the market. And when they get skipped, price tends to move very quickly through these zones. But yeah, for the time being, watch. We could very quickly get a regain if everybody starts getting spooked and start smashing the red button. We did this previously over the weekend, basically, that created the CME gap. We had a bit of a spook dump, regained, and then full sent again. So it's not over yet. Watch for a continuation failure at like the local level. If we do start failing that, you do want to target a little bit lower, at least in the local structure. But be very, very sure is like in these bull runs, you don't want to miss the continuation moves. We could easily flip this back to bullish. We could easily regain priority back in the daily open to make new all-time highs. So tentative, the free longs are probably done. Wait for a regain until you start smashing the green button again, just because a lot of people are having the same idea. Oh, I'm buying it cheaper to come back up and retest. And this is how a lot of these kind of Bart Simpson nukes come to play. Not saying that's going to happen, just saying it's retesting everything. It's done this first stage of this down move. And if it breaks and creates new lows now, that's where the expected move would come down to. But for the time being, again, we're still massively bullish, huge increase, all-time highs, everything's looking strong. We popped all the way up to 90K, and we want to continue. So keep an eye on it. Don't FOMO into a position. Wait for a clear breakdown and loss of level before you start smashing the red button. And realistically, as we come lower into the structure and until we start like significantly breaking levels sub 80K, we still have trending upside price action. So trade accordingly. And yes, we are in the bull run. So that is that. Take it easy, and I will catch you guys later.